Good morning, JP.
Good morning, Brayden. How are you?
It seems so weird being in person.
I know, this is our first live in-person video.
Yeah, I know. So we're figuring out the video as we go.
Yes, exactly. So I wanted to be the guy to bring a topic to the meeting today.
You are the guy bringing a topic.
And I found one that made no sense and actually was brought to my attention by a couple other people we work with.
You're really starting off good here.
Yes.
Your first topic makes no sense.
It's going to shock you because there's a gold rally going on in 2024.
There's a gold rally.
Yes, and no one knew about it until approximately a week ago when the Wall Street Journal started reporting on it.
Yeah.
Because earlier this week, gold spot price actually outpaced the S&P 500 on a year-to-date basis.
Yeah.
So that means if you put $1 in gold or the S&P, you got more money out of gold for the first time in many, many years.
Wow. What's the dividend on gold?
It's zero. However, but how shiny is the S&P?
Yeah.
That's the issue. And so I wanted to look into this more, right? Because to me, it doesn't make sense. As a young person, gold to me seems like an antiquated thing. I'm not quite the Bitcoin age. I think I'm like right in between.
Yeah.
But there was something not adding up. So I turned to...
Stuck between Bitcoin and gold.
Right. So I turned to the news to get to figure out what's going on. I found a couple things. I'm going to read you 3 headlines. Gold is rallying, and it isn't about inflation this time.
Okay.
Okay. It's not about inflation. But if you want to know what's next, you have to look to China for clues.
Mm-hmm.
Okay. And Costco shoppers are putting $2,000 gold bars in their carts.
Costco sells gold?
Costco does sell gold.
Shut the front door.
Yes. In fact, some gentleman who I will not name because I can't pronounce it said he signed up for Costco just to buy 2 gold bars. It's limit 2 per customer.
Wow.
So he spent $150 on executive membership, which I think gives you like 3% cash back.
Yeah.
And did the savvy move of using that 3% to buy $4,000 worth of gold.
Which is not a lot.
It's not. That's literally, it's 2 bars. It's this big. It's smaller than your iPhone.
Yeah.
Right? And so that's really interesting because I was like, okay, well, who does that? Like, is this a crazy person that just like wanted to be on the paper? Apparently State Street conducted an interview or did some research in the market about gold ownership across generations. 17% of my fellow millennials own gold in their portfolio to a really substantial degree. Like they own more gold than the other generations.
Yeah.
And I find that weird. So young people are buying gold, probably because they're scared. There's a lot of geopolitical risks out there. There's been really bad inflation. Maybe
we fed them a scary narrative.
Right. If you've turned on the news, you've probably been scared in the last 2 years, 3 years.
There's a lot of fear out there. Yeah.
So it's like, okay, so they're scared, they're buying gold. That's like a typical reaction. But one funny thing is you mentioned is you said, okay, what's the dividend on it? And there is none, right? Maybe in a year like this where we're worried, we can buy gold, make a little bit of money. But ultimately, when you buy something, you want to invest in it. You want to hold it. You want to make money over time.
Yeah.
So if we zoomed out, which is always good to do, I found a chart that we'll put up on the screen. That's the S&P 500 versus gold over the last, almost my whole lifetime. That's not a good investment story for the yellow metal.
Gold had a really good moment at the Great Recession.
Right.
Yeah.
Right. The ultimate fear lever handle to pull.
The worst we've ever seen in our lifetimes. Mm-hmm. And so then you have all this gold. What did people do with it? Did you go buy bread?
I don't know. I don't think gold's accepted. I mean, you can't even you have to worry about can I break a 20 at a place now? Yeah. Right? Do they take cash? They're not going to go to Mercedes-Benz Stadium with a gold bar. It's a really interesting thing because almost every big portfolio, right? When you worked at Merrill Lynch or when we were at Raymond James, you saw the big corporate portfolios. There's almost always 1 or 2% in precious metals or in inflation hedges.
Yes.
Because the math would tell you it's non-correlated. It has a low standard deviation. But
hold on, we got to break that down.
Sure.
Non-correlated?
Yeah, it doesn't move like other assets move.
Yeah, I used to work with this guy at Merrill, and he always used to say, when the market zigs, we zag.
Yeah, exactly. So low zigging at the same time.
Yes,
you want maximum zigging and zagging.
Yes.
It's low correlation. Low standard deviation means it doesn't move as high or low as quickly. So it's like a rate of change. It's spikiness on a chart if you see it go up and down. So because of that, there's a mathematical reason to plug in these portfolios. But there's also a reason why it never really breaks above 2 or 3%. And it's not a real growth asset where you can predict its future use or value over time. You really don't know what's going on.
Yes.
But you can predict companies.
Yeah. So the difference between gold and companies is one is a business model.
Right.
To me, investing isn't a business model. If there's not a business model, I don't see it as investing.
Yeah, it's a trade. And sometimes it's a really long trade.
It's
That
speculation.
you're hoping to get out
You're
of.
like, yeah, I
Right.
think this is going to go up in price. I'll buy it while it's low.
And gold does have some uses. There's plenty of people out there who will tell you about the litany of uses in it. Like
Yes.
the computers we're using right now to record this and to do that in our
Sure.
phones all have golds. There's an industrial use, but there's also an industrial use in oil. And oil, I think, is very prevalent in most people's lives. If you're old enough to remember the gas crisis, oil markets can bring down the whole economy. Gold doesn't really do that because it's not as large of a player in the global economy overall. The two things one is there is a gold rally in 2024.
Yeah.
Apparently.
I barely knew.
You had, two, no one knew until a week ago.
Yeah.
And three, still no one knows why it's going on. Did buy more gold than any other country in the world, about 233 metric tons of gold.
Yeah.
But it also has the worst real estate crisis it's ever had. It has a really weak currency right now. It's trying to buoy. And the Lunar New Year last year actually sold more gold than it ever has in a year as far as like spending on jewelry and gifts and things like that. So there's a lot of structural reasons why maybe gold would go up and to the right. But over time, it's really never been a historical hedge against inflation. It's never really been a historical outperformer in the market. It's just having a really good start to a year.
Yeah, I mean, we get we haven't yet, but we do traditionally get a lot of questions around gold when there are dark clouds on the horizon.
Right.
And the reasons we tell clients that we typically do not invest in gold is a couple. One, it's not a business model, and we invest in business models because we love business.
Right.
Two, how much do you put in a portfolio? So like, let's say you were a genius in 2008 and you said, I'm going to short mortgage-backed securities and I'm going to go long gold. The mortgage-backed securities, you killed it, but how much gold do you actually have to make a difference in your portfolio? 5%? It's not going to move the needle. 10 isn't even going to move the needle.
Right.
Maybe a fifth-year portfolio might do well. Like, so if you have a fifth-year portfolio in gold and the world and the economic system goes to hell in a handbasket, you're probably going to do less worse than everyone else.
Right.
But it's going to weigh you down for years. And as we show the chart, it just goes sideways, 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 up, down, sideways, sideways, sideways.
Right. Waiting for the next bad thing to happen. That's true. And like you were saying, how much is enough? Like when you're owning gold, it's a serious bet. Like you almost have to divorce it from investing and think about it as something else, because if you just look if you just looked at it as, well, this is going to get me this return in this situation, there are just better tools out there. They're more efficient, cheaper tools that don't take up space in your closet.
Well, I'm glad you said cheaper, because that's it. Every hedge costs money.
Right.
Every hedge costs money. And not only does it cost money because you can lose money on your hedge, but it also has an opportunity cost where you're not making money in another part of your portfolio.
Right. Also, no one can steal your S&P shares out of your closet if you're on vacation. So
man,
that's really
I
important.
can't even put a better bow on this conversation.
Awesome.
Thanks for the conversation. Thanks, y'all clients, for listening to us. This is our first time we've done this together in person. Bear with our camera work, and thanks.